Welcome back to Counting the Cost. I'm Imran Garda. The credit crunch, inaugurated by the collapse of Lehman Brothers a year ago, reached right around the world, and reverberations are still being felt today. In Nigeria, a high court has granted bail to bank executives arrested last month in a financial scandal. In an all-too-familiar story, bankers are accused of reckless lending, manipulating share prices, and leading their institutions to the brink of collapse. Yvonne Ndege reports.
Executives from 5 Nigerian banks appearing in court for using billions of dollars of customer money like their own. The charges range from recklessly giving out unsecured loans to companies where they were directors, manipulating the share price of their own banks, to paying themselves gross allowances to go on holiday. The end result? A pile of bad loans totally eroding the capital base of all their banks. A $2.5 billion taxpayer bailout by the Central Bank of Nigeria saved the banks from collapse. One of their colleagues is on the run in the UK. If found guilty, these executives could spend years in prison. The scandal is rocking many of Nigeria's banks. All 24 banks are under investigation by the Central Bank of Nigeria. But it's the country's anti-corruption unit that's being charged with apprehending bank directors in their homes and offices.
If you are a managing director and you have a limit of $1 million or naira to grant loan to people, and you went ahead without any justifiable reason to grant a loan of about 30 billion naira in clear violation of the rule or of the law and of the rules of the bank, I think there is no political motivation in it. There is a crime.
Guarantee Trust Bank, one of Nigeria's most profitable, has just survived the government-backed probe into its books. The bank's chief partly blames an overheated stock market for the problem, but doesn't think tighter regulation is the answer.
During that euphoria, banks also got on the bandwagon, financed a lot of investment in the stock market. So when things started to correct, towards the end of the year, of course, a lot of banks were caught, with a substantial portfolio of non-performing loans. No regulator can stop a system, that determines, to self-destruct, or any institution that decides to kill itself.
So you blame your colleagues, you blame the fellow banks for what's happened to them?
Essentially, yes.
Many of the non-performing loans were given to ordinary people hoping to get rich quick on the Nigerian stock exchange. More than 20 million Nigerians bank with one of the 5 banks saved by the taxpayer. So it would have been political suicide for the government to allow banks to fail, given the huge number of depositors and creditors that would have lost their money. Propping up the banks with public money politically is a cheaper solution. The directors of the 5 banks saved from collapse have been released on bail and are awaiting trial. The results of investigations into other banks are pending. Yvonne Ndege, Al Jazeera, Lagos, Nigeria.
The auto industry has been one of the biggest victims of the global recession. Since 2008, one of the world's largest car makers, General Motors, has been bailed out by the US taxpayer to the tune of over $50 billion. And in a bid to repay that money, it is restructuring, recently deciding to sell its European arm, Opel, to auto parts maker Magna, a move which may result in job losses. Well, by the first quarter of 2009, car sales across Europe had plummeted by more than 17% compared to a year earlier. David Chater visited the Frankfurt Motor Show, where car manufacturers are having to be increasingly inventive to persuade consumers to spend their money.
All the old tricks were on display again at Frankfurt to try and banish the depression blues and get consumers reaching into their hard-pressed wallets. Leading the charge, Germany's loss-making Opel Group, brand new owners and brand new brands.
The message for the consumer is, there's no reason to hold back. Every new car is an advantage for the customer because it is much safer, it is much more comfortable, it is much more economical, and will in the long run be a good investment.
Opel, like just about every other car manufacturer in the show, were jumping on the green theme. Clean machines that can be plugged in and go further and faster than ever before. Being nice to Mother Nature.
I think this is very much a feeling of a turning point, but it is the turning point to the better after the very dark months that we've just come through, where the crisis really hit everybody unexpected and unexpectedly hard.
The spin and hype machines were going at full throttle throughout the hall, promising a better and brighter future. The car salesmen here are being rigidly optimistic. I've never met one who wasn't. But many economists are saying we could be facing a double-dip recession, and car sales could be about to drive down another chasm. But one car trumped all others at the opening of the show. Hiding shyly under the silver veil was a brand new all-electric Trabant. A whole generation has passed since the car emerged in waves from behind the Iron Curtain, signalling the beginning of the end of communism. The designer of the new version was only 12 years old when the wall fell. Born in East Germany, his fashion sense still perhaps resides there.
It's just a practical car, but nice and lovely, and maybe a trendsetter, we don't know. But I think it's a car for the heart.
Looking decidedly like a Soviet version of the Mini, the car will take you 150 kilometers on just one charge. It just might catch on. David Chater, Al Jazeera, Frankfurt.
Well, as we've heard, General Motors has sold its European arm Opel to a conglomerate known as Magna. The deal has been particularly controversial in Europe's largest economy, Germany, where many Opel factories are located and where federal elections are set for later this month. Earlier, my colleague Samar Shihat caught up with Charles Jenkins, who writes about Germany for The Economist magazine.
How important was the Opel deal for the German economy?
Well, I think it's good, very good politically, because it's come before the election. It's been negotiated a long time. It was being discussed several months ago. There was a bit of from Fiat, of course, but in the end it's this unknown company called Magna which has taken it over. I think it's undoubtedly will help to preserve jobs in the short term. But in the longer term, there is overcapacity in the auto industry.
What does overcapacity mean?
It means that there's factories which are capable of producing up to twice the number of cars that people are actually going to want to buy across Europe and across the world. Well, particularly in Europe. I mean, it's somewhat different if you look at the situation in China or India, where demand may be increasing rapidly. But in Europe, demand is mature now. It's not going to grow more. It may even fall.
You mentioned that the deal came before the elections. Does that benefit Angela Merkel's re-election hopes?
Well, I think it helps both the governing parties, because you have this strange situation where you've got the two main parties, both in government, are now competing with each other in the election campaign. Our expectation is that Angela Merkel will win, though she didn't do too well in a debate with the candidate, the SPD candidate.
How is the German economy doing? I mean, we hear conflicting things. On one hand, we're told that it has recovered, that it's come out of recession, but then the IMF last week came out and said that the German economy might in fact dip back into recession.
I think it'll probably grow for the next couple of quarters. Export demand is beginning to recover in Asia and the US, and that's going to have some effect on Europe. Both directly and indirectly, their exports will pick up, and the stock building also, they will no longer be running down their stocks, so that'll help. And the car scrappage scheme is working very well to keep up car demand. But I think when it comes to 2010, there's a great possibility, yes, that all these things might weaken again.
Many people are saying that the real problem of the German economy is its banking sector. The fact that they're carrying something like $1 trillion of toxic assets. Why hasn't the government confronted these issues head on? Well,
it hasn't wanted to follow the examples of the US, the UK and some other countries of spending huge amounts of taxpayers' money on bailing out the banks. That's partly due to the fact that there's an election coming. It would be unpopular for both the governing parties to do so. The question is whether it's mainly for that reason and whether they will therefore tackle the issue differently after the election. But it's by no means certain that they will. It may be that they will go with the policy, continue with the policy they've kept so far. which is to try and get the banks to rescue themselves, however costly that will be.
Do you think that's feasible? I mean, do you think we'll ever get a situation when banks can, in effect, self-heal?
Yes, I think it can come, but it will take several years. It will take a whole new approach to banking. It'll take bankers to learn the lessons.
You said it'll take several years, but who'll pay the price in the meanwhile? Is it the people or is it industry?
Yes, that is the question. If industry has to pay a very severe price, then the government might think again. But there's various actions. I mean, they might try and do as they're already doing, is to boost the role of state-backed KfW, which it has already 100 billion that it's lending. So try and do it that way. But if they want to get the whole banking sector working again, and it's not working, we can't yet say that it won't work, because at the moment all we know is that in fact that German banks have been actually increasing their lending until recently. So it's too early to say that there is really a credit crunch in Germany.
You said the credit crunch hasn't happened yet in Germany. How is that?
Yeah, well, credit has gone on expanding to businesses right up till now, unlike in other countries. And it obviously is going to slow down, but that is because of the lack of demand at the moment, as companies are not wanting to invest. So the question is, will there be a future credit crunch because of the very parlous state of German banks, or will German banks manage somehow to keep lending within Germany and to gradually restructure themselves? And I think this is a big and fascinating question for the coming 12 months in Germany.
Charles Jenkins, thank you very much.
Last week we asked you whether oil was a blessing or a curse. This week our question to you is, 1 year on, what lessons have been learned from the financial crisis? Let us know what you think on our website, aljazeera.net/English, and click on the left-hand side for your views. And you can keep up to date with all our business stories on the same site. Well, that's it from Counting the Cost this week. Thank you for watching.